markets that are still higher. We've got nervous investors. It's almost like this game of musical chairs. Did you ever play that when you were a kid?
Of course I did. Yeah.
Was it like a cakewalk type thing?
Yeah, I mean, it's and plus there's so many cliches behind it. It's like everyone's getting nervous until that music stops, and then you run to get in that chair. It's it's funny because I got my daughter's 7. I don't think she's ever played musical chairs. I don't know if that's still like a standing thing that the younger kids are doing, at least in my experience. But to answer your question, yes, certainly played musical chairs.
Do you remember like when you would be in the game? Let's just say there's 10 kids that start out, and there's 9 chairs, and the music plays, and of course the guy shuts it off right away. And then after the next one, a couple rounds, you're starting to notice a little bit of a pattern. And the market I've found to be very akin to this. It's almost like we've been playing this game of musical chairs, and you've made it so far, and now this time the music continues. And it gets to the point where you're dragging your rear ends across the seats because you want to almost be seated. But, of course, then somebody's yelling at you. You can't do that. You got to stand back up. Inevitably, somebody's going to get hurt, but we're waiting for the music to stop. It's almost like we've got a nervous market going. It's got to stop soon. But I don't know how much longer it's going to continue. I'll give you an example. Micron, it fell to, $64 or so back in April? Mm-hmm. And the stock now trades north of $210.
Yep.
Speculation that the company is going to have earnings. That's speculation. Cryptocurrencies edging back up to their all-time highs. And it's just continuing. We don't have the economic numbers to show that this would support this type of growth, some would argue. While others would say, listen, this is investing in speculation, and this is the United States getting ahead. And so, yeah, this is justified. Which side of it do you sit on? 97959 Money. Jeremiah, how about you?
Well, it's we had Dr. David Kelly on the program a couple weeks ago. I think we just broadcasted it last week, which is a great interview. But he had a good point. He's like, listen, the U.S. economy is like it's like the tortoise and the hare, but it's more like the tortoise. It's slow, it's steady. It's slowly chugging along from a grander economic standpoint. But where you bring up a good question, and this is a statistic that some people are arguing that the market's a little bit frothy, is that you look at stock performance and its valuations from the market standpoint compared to GDP, like economic output. Yeah, we're having a bit of a discrepancy between those two, which we haven't seen in the past, unless there was a bubble right around the corner. And it's tough because many individuals, if you look at these large institutional money managers going into 2022, into 2023, into 2024, going into 2025, many of them were calling for, we're going to see a recession, or the economy's going to do this and the economy's going to do that. So if you were hanging your hat on that type of pessimism, then you missed out on one of the best bull market runs that we've seen in a long time. I think I saw some interesting stats on the bull run where we saw a bottoming out on the S&P 500. I think it was 2022, and the S&P 500 is up 90% since then. So, it's one of those things where there is some truth to this, where you could say that things are a little bit frothy. Yeah, I mean, is this sustainable? But you look at this past week, you have corporate earnings coming out that are beating expectations. GM had a big bounce. You had Ford having a big bounce, meaning you're having some participation in these sectors and these companies that aren't necessarily a part of this technology AI boom. Which gives me a little bit of peace of mind. We had inflation numbers come out in the CPI, Consumer Price Index, on Friday. And the only reason why they released that is because they're leaning on those numbers for cost of living adjustments for Social Security, which, by the way, if you're receiving Social Security, you're going to look at a cost of living adjustment of 2.8% going into 2026. So there's that aspect too. But again, when you look at the inflation numbers coming in a little bit lighter than anticipated, and then you have an expectation from a market standpoint that the Federal Reserve is going to be a bit more aggressive on interest rate cuts because they're focused on the labor market, you factor that all in, that is justification for this market to still continue to see these gains. And again, there's always risks that are lying out there. I mean, you could see, I just saw this post that Trump just basically cut off trade negotiations with Canada because they aired some type of advertisement with Reagan. I just saw the headline on it, which again, that is always out there. I mean, we saw a big reaction from Wall Street when there was some turbulence with negotiations with China. So there's always these external catalysts that could derail this, and we could see pullbacks. We could see volatility, which again is It's the cost of entry. Listen, if you want some reward by being a long-term investor, this is just a part of it, right? So are there certain things that we could look at that we're taking opportunities of? Of course, right? I think that's why you don't be completely agnostic to this and just set it and forget it. There needs to be some type of maintenance and monitoring of all this, but there's also that other side where, again, all this momentum and this market growth that we've seen really over the past 2 years, it is riding on one thing and one thing only. Does AI, artificial intelligence, really live up to the expectations that the market has right now? And how patient can investors be? That's in my opinion what it boils down to.
Kind of makes me think the NBA gambling group would have liked to have taken the odds on that one too, and like to hear what your opinion was. But in lieu of that, you can call the program and tell us what you think. 979-59-MONEY. That's 979-596-6639. We can talk about your finances, estate planning, taxes, whatever it is. If you've got the questions, we've got the answers for you. Jeremiah is here. I'm Brian Wiley, and again, you can find us at therealmoneypros.com. When I was talking about the market moving higher, I'm just looking back at the years that I've spent in this industry while I've been working with clients. And in the late 90s, it was this speculation that the internet tech boom didn't have an end. And it was the expansion of the creation of companies and Silicon Valley really getting going. And then when the rug was pulled because the speculation time had ran out. These patient investor monies that had gone in to start these venture firms in the early 90s that finally became publicly traded in the late 80s or late 90s, they were still not profitable, so the rug got pulled. AI is no different. In fact, we could go back and look at various periods throughout American history of looking at how our markets have traded, and we'll notice that there's always an irrational exuberance, which is the word that was used by Greenspan talking about the internet tech boom era. Well, how do you feel about things? Does it concern you, or what is your action plan, or do you need an action plan? I'm going to suggest that everybody needs to be able to explain their action plan. This idea that you're going to have cash set aside for short-term market events that could last as long as 18 months, maybe 3 years. And then what are you going to do for the long-term money? And then how do these events start to shape what it looks like inside your investment, not only portfolio, but your career in doing your own investments? And are you a do-it-yourselfer? Is this something where you're smarter than the rest? I want to hear your opinion on it. Because where we sit right now, it's concerning for me. We're looking at this open discussion, Jeremiah, about the U.S. government just continuing to purchase U.S. companies because of their industry. And I think a lot of people are supporting it, and I'd say largely I do as well. But what we're doing is we're making some real big different. This sounds like President Trump himself said it. Bigly different ways of handling our government moving forward. If we have a lot of government interaction into our companies, it starts to look a little bit like socialism. However, you can call it protectionism. Which side of it do you sit on? I'm curious, because capitalists would say free markets. That was what that Reagan commercial had included in it, which was the ability to choose to spend your money any way you choose, right? That is a free market. No regulation. It just runs. Now, does it just run? No, it ends up needing to be regulated. Then to what point? And then protected and tariffed and taxed, or let it run free. Everybody has an opinion about it, and yours will not be known until you call this program to tell us about it. 979-59-MONEY. That's 979-596-6639. Because remember, we're a nation of special needs, and as these special needs become bigger to us, then we're going to make special exceptions so we get those needs met. This is Real Money Pros. Make this year that you work smarter, not harder, with Ataraxis. As your strategic partner, Ataraxis becomes an extension of your business, taking the burden of HR, payroll, benefits, workers' compensation, compliance, and staffing off your plate. You'll have more time to focus on operating and growing your business. Let Ataraxis handle the details so you can focus on what matters most. Learn more at ataraxis.com. That's ATARAXIS.com.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
This open enrollment, start making meaningful progress towards your long-term financial goals. Did you know that a health savings account, or HSA, is the most tax-advantaged account in the U.S.? Contributions are tax deductible, which reduces your total taxable income. Withdrawals for eligible health expenses are also tax-free. And last, capital gains on investments are also tax-free. Did we also mention that it's free for individuals? Visit livelyme.com/pro today. That's livelyme.com/pro.
And now, back to the Real Money Pros.
We are back. This is Real Money Pros, therealmoneypros.com. That's how you find us. Go to our website. You can sign up for the newsletter. We're not going to sell your email address to anybody and spam you. We don't do that. Now, our advertisers want to know who. And, of course, our advertisers are also not going to share your information. And they're also going to provide you great feedback with a newsletter with real content inside of it. Content that is applicable to everyone that listens to this program, which is how should you optimize your tax situation? And if you're a small business owner, when do you take that leap and do an S Corp? Or when do you hire a CPA? How about an estate plan? Do you really understand the difference between a trust and a will, or revocable versus irrevocable? That education happens inside the newsletter. Plus, it happens right here on a radio program. We're here for you. We'll answer your questions. We're live. We're here on Saturdays. Jeremiah and I are compensated by our sponsors, so we're not selling you products, nothing like that. Yeah, we're financial advisors, and if we're so lucky to talk to you, then we'll talk to you anytime you want. But here on the program, 979-59-MONEY, please visit our sponsors that you'll find on our website as well. So Jeremiah and I are talking about the shift that we're having in our economy, which is showing great strength right now as far as if the gauge was the markets. And the markets is just predictive of a future economy. And so right now the markets are predicting a very robust economy, to the point where you've got stocks that are up more than 300% since the lows down in April. And investors are saying that they're comfortable enough with the future earnings to make that fit. Now, you're an investor trying to handle your 401k. You're looking at this thinking, I got to get my kids to practice. I'm just trying to make this work. What should I be in? I'm listening to the Real Money Pros. Give me the answers. And Jeremiah, I'm asking you, what are the answers here? Because it seems to me the pendulum is swinging really hard in a whole bunch of aspects of our lives.
Yeah, well, I mean, there's the data component, where I saw another interesting release from Financial Times where it said that ChatGPT has reached 800 million users in under 3 years. It took the internet more than a decade to do the same. So they're basically stating that this adoption, like this is the fastest technological adoption curve that we've seen in history. And yeah, I mean, hey, listen, times are different. Times are different. You have a younger generation that's way more adapted to technology. Technology builds on itself. It grows exponentially. And here's the thing. Our capitalism, our economy, I mean, the world as we know it, like, people don't just stop. Like, look at Apple, for instance, and the iPhone. I mean, Apple had a decent pop in its stock price. Talking about companies hitting all-time highs and big growth. Apple hit an all-time high recently because projections on their new iPhone sales are exceeding expectations. But do you really think Apple's going to get to the, I don't know, what they're on, version 17, the iPhone 17? You think they're going to get to 18 and just say, hey, we hit the mark. We're done. It's not going to get any better from here. No, it's continued development. It's continued ingenuity. We're going to see this across the board from all sectors. So, again, I mean, as long as humans are humans and we have an economic system as we know it, I mean, we're going to see these pockets. We've seen it in the past. We're going to see it in the future. We're seeing it right now where that is a concern, where are things overvalued? Meaning, is the economy justify what we're seeing in the market? But you also got to understand that Wall Street is not Main Street, and it never necessarily has been the case. So you as an investor, you can look at this two different ways of, okay, market's at all-time high. This isn't justified. I'm going to keep my money in cash. That is an investment decision, by the way. And is it the right one? Probably not, because you have cost of living, inflation that's working against you. You have all these other dynamics that are working against you. So the reality is you got to participate. You got to participate, and then you have to distill it down to how to make sure that your desired outcome is met. That's the tail that's got to wag the dog here. It's not just some haphazard of, I'm seeing the markets go up. I'm not participating. Time for me to put my money in so I can see some gains, because you know what's going to happen the day after you do that. Market's going to melt. Your account value is probably going to drop 30%, and you're going to be like, I knew I shouldn't have done that. And then you pull your money out. That's the emotional tie to money and investing. That is certainly a part of the equation. So how do you avoid that? And I think you can get to the point that I'm getting, is that you don't necessarily be concerned with what the markets are doing, because the markets are going to do what you got to do. You got to be more focused on your approach, your strategy, and how you can emotionally handle the ups and downs and where we're at in the market. And this is starkly different from, 10, 15 years ago of how fast things are moving. Look at earlier this year where fake news broke. There was a fake, I don't know if it was fake, but I think it was a early release of a breaking news that happened on Twitter. I think it was reported by Bloomberg or maybe CNBC. And we saw I think it was like a $2 or $3 trillion move in the market within a matter of like 3 minutes. So again, it's just with how fast things are moving with technology and how quick the markets are moving. I think the one thing that you have to be prepared for and have your expectations set as an investor is you're going to have volatility. So then how do you handle volatility? Well, you understand the timeline, meaning time-based investing, and that will protect you from it. And that's the bucket strategy that we preach over and over again, because it works. COVID showed us it worked. The Liberation Day showed us that it worked, meaning the clients that had delayed gratification, saved assets to fund their retirement, it was not left to question, meaning no matter what the market was doing, if we saw a big 30, 20% pullback or 40% or whatever it is, which we saw during COVID, their retirement picture was still intact. Like they were fine. So in my opinion, with these market dynamics, they're there. They're always going to be there. Insert this year, it's tariffs, it's government shutdown, it's infighting. That's going to be there. There's always these existential movements that can derail the market. And again, that's a feature of the market, not a problem. And it's how you make money.
Jeremiah, you just mentioned something that I don't know why I've never really thought about it this way, but it makes complete sense. So we talk about risk and reward, and a lot of folks would say, well, what is risk? Risk is, your potential to lose everything, right? And your reward is to get everything. So right now, the risk and reward that people want is experienced inside the cryptocurrency markets. Okay, but then you just brought up another thing, which is volatility. Okay, so don't confuse one with the other. Your risk level, when you think about risk, like your tolerance, now this is where people will fall into these categories of conservative or moderate or aggressive. And I think that this is an issue because as an investor, if you view it this way, then you're ignoring volatility. Volatility is necessary for a length of time. And what we're looking at is, and if you understand electricity, then you could say it's amps. Like, what are the spikes, the ups and downs, and can that person emotionally handle it? That's where we talk about the risk tolerance. Can they emotionally handle it? It's not about the investments themselves. Can you emotionally handle the plan? So the plan is really simple because you calculate yourself right into it. The calculation is, I'm going to pile up 3 years of all the cash I know I need to spend, or all the cash I need to spend in the next 3 years. I'm going to pile that up, and it's not going to move. Stable. And then as I use it, I need to replenish it. So I'm going to buy some income. And now that was calculated because that's easy. And then the rest of it goes to a growth portfolio because you're going to leave it alone. It's like the stew. You got to let it actually stew. And you know that the volatility are the moments in between where you are so tempted to touch it or taste it or do something like that. What we're saying is leave the lid on, put it on a medium heat, and give it some time. And it's always going to end up, well, it's mostly going to end up in your favor for doing that. I cannot say always. Compliance just went nuts. 979-59-MONEY. That's 979-596-6639. You know what I'm getting at. It's the guardrails. You know, it's just easier to just stay between them, right? It should. You're probably right to do so. We'll talk more about this when we come back. Reach us here, therealmoneypros.com. Jeremiah Bates. I'm Brian Wiley. We're going to take a break. We'll be right back.
Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to The Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost.
costs. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. This is The Real Money Pros, therealmoneypros.com. Jeremiah Bates is here and Brian Wiley. I got it. You know what? I may have not have started this morning or day off so great, Jeremiah, because I was a little surprised. I went out to go grab breakfast, and it was just like counter service. And you walk up to the counter, and you order the whole thing. They basically give you the flag, and you go sit down, and they just bring your food out to you, ask us if we needed condiments or whatever, and then they walk away, right? So right when you pay, the point of sale, I pay for it, and it was an expensive breakfast. My buddy ordered a bunch of stuff a la carte that turned out each one is a full meal. So he basically had 3 plates in front of him. That would explain the cost of it. But the tip options that were coming up were 15, 20, and 25%. I'm going to guess there's a few folks listening to this program right now that can identify with me on this one, which is, first of all, 25% was never a discussion when it was tipping. It was never asked for. It was not an option. And it was certainly not calculated onto any receipt that was going to be handed to you as a suggestion. 25%. The old tipping rule, as far as I know, is if you got okay service, you tip 10%. If you got good service, 15%. Outstanding, 20%, and probably gave them a nice compliment. 25% was an option, and it was counter service. They didn't come to the table and, tell us about the menu and offer coffees or whatever, and then get you the condiments and then come back with your food and check on you. None of that stuff. It's counter service. And so tip fatigue, is that what you called that?
Tip fatigue, yeah, I think that's a phrase that's been coined because this, this whole issue with these default, because a lot of it is like it's that screen, right? Where they turn it around, you tap your card, gives you the amount, and there's 3-4 options. And you're right. I mean, it seems like it's defaulting. Some places it defaults to like the lowest option is 20%. It's like 20, 25, 30. It's like, and then there's the other. I'm like, yeah, I'm going to other. I'll just give you a flat dollar amount. But yeah, I mean, I get it. It's just it just seems, I don't know. Again, we're on this topic of the times that we're in. It's like, yeah, I think a lot of people are kind of, which I don't necessarily agree with this idea, because I've seen a lot of people push back and like, well, if you can't tip or you don't like to tip, then you shouldn't be out there eating anyways, And it's like, I don't know about that. That's a little ridiculous.
This is like a new medical condition. There's going to be pharmaceutical company, just Merck or somebody, Pfizer's going to come up with it's going to be a new drug to treat tip fatigue.
But you're right. So prime example. Last night, we ordered pizza. I went to go and pick it up. So walking in, there's a little bit of a line, and there's a gentleman, and there's a younger gal doing a great job, doing her best. It's clearly busy Friday evening, prime time of when people are ordering pizza. And there's an older gentleman at the front, clearly upset the fact that they don't have ready-made pizzas. Like he's I wouldn't say as far as throwing a fit, but it was escalating there. And your heart goes out to this young gal just trying to de-escalate the situation, keep things moving, and hats off, she did. She handled a great job. Guy ended up simmering down. Didn't apologize when I didn't agree with. But anyways, I went up to the front. I said, hey, I saw what you did. You should be employed. Just give her some kind words, and then gave her a nice tip, right? Because I'm like, I think it's well deserved. If I can help have a positive spin on this negative interaction, that's great. But that's how I kind of view tipping right now, meaning I need to see something that justifies the tip as far as the service. But if you're talking about self-serve, I'm planting the flag here. I'm out. I'm not tipping. Maybe $1, maybe, but not definitely not 20%.
All right, so the Real Money Pros poll for right now, but you have to actually call in or use the Ask the Expert. You actually use the text feature on our website as well. But what is the percentage that you think would be appropriate for counter service? Now, I'll explain the counter service if you need to know. Subway. Okay, what's the tip amount? Okay, that's it. Because those options, I'm not sure what Subway say. I'm just saying that I'm trying to create the image in people's head. That's counter service, in my opinion. Now, in this case, they actually bring the food to us, which is really nice of them for the 25% offer. Okay, because you've got clients, I've got clients that have restaurants, that own restaurants. Yeah. Do you know their margins, roughly?
In
the end, sales to their net income.
They're tight. And these are kind of like
10% or less.
Yeah.
Okay, so you own a restaurant, you take all the risk, right? You put up the building or you rent it, lease it, you got all this equipment, you've got the employees, you're processing payroll, and plus now you got to make food. And you get to it and your margins are, let's say, 10%, but heck, 15%. Your service staff walks in there, looks at the bill, the gross bill. Remember, you're only working with that number. They're grossing that number up, and then they're asking for 25%. No risk. So here's the message. Don't own the restaurant, work for it. And better yet, it's just one of those things where if you're looking at the markets itself, we don't want to be so into something. We want to be able to reap the benefits from it. So if we're looking about like the AI boom or the crypto boom thing, as a lot of people are trying to get in the ground level of the crypto, or it's like they're going to be their new career, this focus. If it fails, well, then you're going to experience risk, which is what I talked about, which is this notion in your head that should be there of complete loss. And maybe it comes after everything else you own, too, because you're dumb enough to have futures contracts and things like that.
AKA gambling. That's why I can't stand this analogy that people use of, investing your money in Wall Street is like putting your money in a casino. Well, no, when you go to a casino and you're at the card table, you don't actually own any asset. Like it's either you win, you get the money, or you don't win and it's gone. Like, starkly different. Like, again, it's really, and this is where the education comes in, Brian. Sorry not to kind of derail, because I know you were going to bring up a good point, but the education, understanding of why you're actually investing, what you're investing in, it completely dismantles that whole approach of, oh yeah, this is, you're putting your money subject to losing it all. It's like, well, there are some investments. There is like aspects of investing that certainly fit that. But generally speaking, if you take a well-diversified, time-based approach, you're casting a broad net. I digress on all the other jargony terms. That's not gambling. Like you're actually owning assets and your money's working for you, versus the risk that you're talking about, where let's imagine this is some unknown cryptocurrency that does have the potential to go to zero. Like the odds of that are much higher than, let's say, a company that provides a worldwide or nationwide service that has been in business for a very long time, and those products are sought after, and you can keep going down the list of where you can kind of make more prudent decisions around investing. So again, this idea of risk is super important to understand, because a lot of people can find themselves defining themselves as a conservative or aggressive investor, which again could put you in the wrong place of where you're actually allocating your money.
And what I'm saying is that I'm not sure, after all this time, 25 years, and it just occurred to me in the last 20 minutes that maybe this risk idea has been disconnected with what you think it has been all this time. What is risk? And we talk about this again, risk tolerance, and we've come up with this description of a person. Let's say conservative, moderate, or aggressive are the three choices that we're going to give. And then I'm going to ask you, which one do you fit in? Now you're thinking investments. But I'm actually thinking, no, I'm talking about tolerance, because the tolerance part of it is, if you are an aggressive risk tolerance person, then I would say that you're going to be highly subjected to the political sway or influence, which would then later translate into you making irrational or extreme investment decisions. Meaning the risk tolerance I want to know is your emotional tolerance. Like, how much fortitude does this person have to be able to withstand all this volatility which is the new word. That's the market or economy word. That's the real results word. The volatility, and can they handle that? When does it become more than just a chink in your armor? Does it pierce it at what point? Because there is no conservative investor. A conservative investor is a person, if you look through the better buckets that we have, that better bucket, that first bucket it's all in cash. It's stable. And if you have a lifestyle that is set up where you need 3 years of money set aside in cash, and that ends up being the vast majority of your entire investment asset mix, let's say 80%, then yeah, we in this industry and you in your head are saying you're an extremely conservative investor because you're 80% in cash. Okay, I agree. But it doesn't mean that you're not an aggressive or an emotional person that I think could do this better. See, the investing thing you think is a bunch of just a game of numbers, but the game of numbers is the part that is manipulated by people who know that your emotions go all over the board. And politically, we are right now even convinced that the U.S. government should continue to take stakes in different industries to the point where we're saying we're doing it for protectionism, right? But I'm asking you on a political side of this, again, are you conservative? Is it a conservative notion, even in the least, to think that we would stray from capitalism and go towards socialism, which is having government control in multiple industries? I get it. Maybe the liquor industry, there's some controls there and things like that. But come on, mining, AI, quantum,
chips,
space. 979-59-MONEY. Your thoughts next. The Real Money Pros.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Have you ever met with a financial advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit TreeCityAdvisors.com and start your journey to financial freedom now. That's TreeCityAdvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
back to the Real Money Pros.
We are back. This is Real Money Pros. You can visit us online at therealmoneypros.com. It's pretty simple. You can follow us on YouTube, any of that. We actually have video during the program, even for our interviews as well. We do take phone calls on the program. It's a quiet day. That's okay. Because right now I'm actually talking about something that I'm a little frustrated with society, with Americans, and a little embarrassed and kind of ashamed at times too, because the polarization that we have right now. And okay, let me just say this. From the investing standpoint, what I'm saying to you is that there is actually no such thing as a conservative or an aggressive investor classification. It should be over in the political realm only. And the question is it's conservative or liberal. It's these extremes, right? These are generally what I choose. This is generally what I choose. Okay, in the markets and the investing part of it, you should be invested in a way that calculates to best optimize your results for your goals. That's it. The other part of it is the emotional score, the behavior. The classification of your behavior is important, because your behavior could be affected by outside of your investments type of topics, such as politics, religion, lots of things, family things. Your emotions then translate into your actions of screwing up your portfolio. And then, of course, then you have greed, and you've got fear, and you've got all these other things. And my question is are you being counseled for this with your advisor? Like, are you having this type of discussion, or is it dry? What's it like when you go in and they hand you your statements and what they tell you about their performance, and then they try to sell you some insurance policy and then you bail? Or is this is it a question of, hey, these are the goals that you had asked for, and here's where we sit on that path? Is it a visual thing? Like, what is it that you're hearing or doing to allow you to continue to investing into a rising market like this without making changes? Because I wonder this all the time, Jeremiah. In 25 years I've been broadcasting, and over 20 years of that was every day. And I say every day because I was doing 5 days a week and shows on the weekend. So when I say every day, it was every day, except I did do 2 shows on Saturday. I counted one of those as if it was Sunday. So that's how I got 7 days. All right. People listen, and for some reason, if you ever love me, you love me when the markets are getting crushed. You like it when the economic news is dismal. You want to hear about the volatility and what to do when the markets get crushed. We know this, and we proved it again this year in April. And we have record numbers listening to the program, record numbers that would then interact with our team, send messages. The Real Money Pros called this program. Like, you don't go through an hour of a program without having a phone call from somebody when the markets are low. When the markets are high, and by the way, this, as financial advisors, Jeremiah, you know this as well, your appointment schedule fills up, not only with your existing client base, but with new people that need to get in and meet with you because everything is a disaster. Here we have a market that we've just talked about is at all-time highs, and we don't know why. We don't know what really supports this. There's a lot of theory, but what this is, it's all about emotions. We're finding out that emotions are holding this market up. And if that's the case, my question is to you, which is, why have you not scheduled or called? Why would you ask for the appointment when the markets are good to say, how do I protect and maintain what I'm doing versus how do I recover and fix what I've done? And I don't like having those discussions either, but see, it's one of those things, like, the better you're doing health-wise, Jeremiah, you know this too. You don't call your doctor and say, can I come in for a wellness exam? Hey, I think it's time for a prostate exam too, thanks. You don't do that without them saying that you need to come in and do it, or you wait till you're sick. What I'm saying is, I don't know, let's just change our thought process. I'm not going to switch everybody to use a natural path right now, but okay, let's do it. Why don't you go talk to your financial advisor, your CPA, or contact us, or call this program and tell us what the issues are now, and compare that to how it might be in a different phone call a year from now, or 6 months, or 2 years. I don't know in all this stuff. It will take a break. That's the volatility part of it. I'm curious, can people handle it?
Yeah, I look at that. I was kind of thinking about this earlier this week, where you look at the broader markets, if you will, and how you see these big swings, and when inevitably we do see a bear market, and I kind of look at it as like, it's like the greater market rebalancing. You know, it's like there's point in times where you see this rebalance from the greater markets where we've seen in certain timelines where we saw during COVID and we saw during the great financial crisis and we saw during Liberation Day, meaning you see this institutional money and large set of money pivot to one side, and then eventually it's going to rebalance to the other side. So again, you as an investor, how do you make sure that does not decimate you? And you're right, Brian, when things are riding high, we're reaching all-time highs, you're seeing your accounts beat the average market performance that we've seen annually, you're feeling really good. But the question is, what are you doing proactively right now in light of all-time highs and great market performance, great bull runs, to make sure that not only are you protected from a market downturn, but I mean, maybe there's a recalibration of goals. Like I have many clients where it's like, hey, the trajectory's changed, meaning we're not have these more stricter guardrails that we have to adhere to based on our initial planning that we've done, just based on the outperformance that we've seen in the markets. Great, we can go buy some more income, increase your cash flow. We can take some cream off the top of your growth accounts, and we can do some cool things as far as the impact of your quality of life. Like, those are great conversations to be had as too, meaning your money is a tool. I've said this before, and money should serve you in a way that brings you peace of mind or increases the quality of life. So I would also argue that if you're just sitting here now, happy that your accounts are gaining, I would say the deeper question to ask is, why do you want your accounts to gain in value in the first place? Well, I want them to gain because I can do insert whatever it is. So yeah, now's the time where you should be meeting with your advisor and saying, hey, I've been thinking about this. It adds on to our initial cash flow projections or goal-based planning or whatever it is with this market growth. How do you translate this great growth that you've seen in your investment assets to something tangible or an experience or something that's going to give you an enhancement in the quality of your life? Those are the conversations that I'm having with clients right now. It's like, no, we can't just sit on the sideline and just be happy when we see good market gains. I mean, it's like, what's the plan? Like, what are we doing here? We got great gains. Where do we need the pivot? And obviously it's different for where you're at as far as your use of money and the timeline and all that. Younger clients, met with a great younger couple earlier this week, that high income earners, 2 kids. They've been doing a great job self-managing their assets, but we uncovered some efficiencies specifically around taxes. She's self-employed and she was putting money into a SEP IRA. I uncovered that she can get some significant tax savings by moving from a SEP IRA to just using an individual 401k, where she'll be able to do a higher pre-tax deferral, lowering her taxable income, and by the way, maximize her qualified business income deduction, which is 20%. Meaning you compound that over the next 25 years as she plans to work. We're talking about significant savings that doesn't have some secret sauce from an investment standpoint, right? So again, to your point though, Brian, around it's a dangerous thing to do, in my opinion, to already walk into your investment strategy as defining yourself as conservative and aggressive. I would argue that you have a strategy that then calculates you into what percentage of you is conservative, what percentage of you is moderate, and what percentage of you is aggressive. That is the winning formula, in my opinion.
All right, so every person listening to this program, I know a lot of people have, like, let's say a Fidelity 401k, so you access that. Pull up your statement and look at the pie graph. And you tell me that pie graph now describes you. Okay, so that pie graph is your description, because if we're saying that conservative, aggressive, moderate, whatever it is going to be the description of that person, then that pie graph is supposed to describe you. Okay, here's the way that the pie graph is going to be explained, which is there's 3 components essentially. It's going to be cash, income, or it's going to be aggressive, some sort of growth. That's it. And we would say the aggressive growth, if it's not 100% inside of a 401k, then anything less than that makes you look conservative or moderate, or it's just in the wrong place. And we're going to talk more about this in the next hour. Be sure to catch it. Please interact with us. 979-59-MONEY is the phone line. Of course, you can visit us at therealmoneypros.com. But does that actually describe you? And I know it does not. It's the deceiving thing. If you understood better buckets, which is the Real Money Pros, this is what it's all about, which is it's a calculation. 3 years worth of the cash needs in that first bucket. Middle bucket is replenishing it. So it's a calculation of how much needs to replenish it at what rate. The rest of it is growth. That 401k, if you're outside of 10 years, should show 100% growth then, in that case, because it's all growth. It has nothing to do with your risk tolerance. That's your emotions. We'll be back. Stay with us.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deirdre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financial goals, visit therealmoneypros.com. That's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buy-downs that help lower your monthly payment for the first several years of your loan. loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected, subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Bar and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. A need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's life.com. priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO.
Real Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates. The weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, happy Saturday to you for hour number 2 of The Real Money Pros. If you missed the first hour, please pick it up. Go to therealmoneypros.com. This is a live program on Saturdays. We're talking about the real world that's happening right now with a market that's in all-time highs. Jeremiah Bates is here and Brian Wiley. We're both financial advisors, active in the trade, fiduciary only. We're not selling you on our services right now. We're selling you our sponsors. But we're taking your phone calls if you've got them. The last hour is quiet. Crickets, right? Crickets, I was asking the question, which is, what is it that you're doing to moderate your investment actions, your plan? Do you know the plan, the strategy? This hour, still want to take your phone calls. We're going to talk about strategies that where the rubber hits the road, right? But I'm still open to the discussion. If you want to have it, I'll even go politics a little bit if you'd like to do it, which is, how far will this go? How much do we want? How much does it tolerate? Is this all attributed to the actions of Trump? Or what are the other moving forces here? What are the risks that we're experiencing in our economy as a result of it? I guess now we're stopping all trade negotiations with Canada because of the Reagan commercial that was played. And man, things are out of context. People are very emotional. And you're doing irrational things maybe, or you're doing nothing, which is also irrational. Because when it's hitting the fan, well, then you will do something. But instead, you do nothing because it feels good, right? So that's irrational, in my opinion anyway. 979-59-MONEY. That's 979-596-6639. Jeremiah.
Yeah, I mean, obviously we're talking about markets. Markets are important. It's a big facet of how you grow your money and all that. But there's so many other things outside of the markets that certainly affect your financial picture. And we talk about this holistic approach. What's most certainly is going to be involved in that is insurance. And if there's one thing that we're running up against right now, the Affordable Care Act, a.k.a. Obamacare, do these enhanced tax credits, will these continue into 2026? So we have some big changes on the horizon. We had a phone call. I mean, obviously, we are up against timelines of when we can take calls and actually air those live during the program. So we had a great interaction with the caller that we were able to record, because this was after we were done with our live broadcast. So, Josh, if you can cue it up, go ahead and get that thing ready to play, because this was a great question, and I'll kind of preface it around that. It was an individual who was working for an employer. Their insurance needs were met. They separated from that employer. They are now self-employed. So the question is, how do I, as a self-employment individual, approach health insurance, and how do I approach the tax credit along with COBRA? Okay, it looks like we don't have enough time for this segment, apparently, Josh said. So we're gonna play that at the bottom of the hour.
You spend all the time introducing it.
Yeah. Again, this is what we're talking about. You know, the beauty of live radio is that you gotta be strategic on when you're hitting the times of these, right? So that call is about 7 minutes and 45 seconds. So this segment we've probably got about 5 or so minutes. So well, I think we did a good job staging it for when we will play it in the next segment, because it's important. But
great.
Again, we're live, and this is listen. If you have if you have a question, then there's a good chance that the community of listeners are there's going to be someone in that community that's going to have that same question as well. So call us. We're accessible. We're reachable either through the phone, 979-59-MONEY. That is 979-596-6639. You can visit therealmoneypros.com. Use the Ask the Experts feature. There's a chat window open as well, which, by the way, Brian, someone sent in the chat when we were last hour, said your cabin house looks nice. Are you planning to retire there? So I went ahead and answered, and I said, I think he will eventually.
Eventually, yeah, I'd love to be able to do it. We're still trying to finish it up. We're in the final stretch right now. And in fact, there's a guy that's nailing up baseboard and trim work right now, and we shut the door between us. So this is how well insulated the house is. I'm sitting out in the garage area, and he's inside nailing. You can't hear it during the program, can you?
No.
He's shot a couple hundred nails in the last hour, and I knew it was the house is really insulated. R42, I think, is what we ended up calculating on it. For those of you that understand construction, I guess that is pretty efficient. It should be pretty neat, but it's expensive to build these days, and it's something I've been planning for a long time. And no, I'm not going to retire here. It's one of those things where nobody in my family ever had any kind of a family cabin or a gathering spot that became a family place, which my son and I about 10 years ago had this conversation because we've moved around a lot. Like we buy a house, sell a house, and live in it for 5 years, and then upgrade or downgrade or whatever, just change locations. And he had said, I don't know that I ever really feel like I have a place where I called home. And it broke my heart to hear that, honestly. And I thought about this deeper going, because I've always had friends that had cabins and so on. I'm thinking, well, who actually did that? Like, which set of grandparents bit off and suffered or had the dream to create that place where you all gather now? And I realized I didn't have that in my family, and I decided, like, why am I looking for the past? Why don't I make it me? And I'm the one that's going to start it for the family, and they're going to decide whether or not it has value to them, and it's going to have that. But I had to do it. And it's, in my opinion, to really kind of fix this whole idea of what I think is a good, healthy family. And so this is a great example, by the way, of what we talk about with goals and unexpected things happening and pricing and things like this. Get this, Jeremiah. So we were digging a well about a month ago, and they got down 40 feet and cracked something, and water starts shooting up out of the hole, but they had to cap it. I said, well, why can't we use that? Because now we don't have to pump it. And he says, well, the county won't allow you to actually use it. It's an artesian well, so we have to go dig another one. 25 feet away from that hole, they went down 280 feet 2 days ago in dry.
Yeah.
I don't understand geology, hydrology, and here I am taking all the risk as if I was an expert. And it's not a lot different than what we do inside of our investment accounts. Like, think about this. You're dealing with amounts of money that you've never dealt with in your entire life. And if you're going at it at your own, then you're proclaimed as the expert. And you're responsible for the results, just like mine, 280 feet down. Now, I just marked where I said I would prefer it to go because their first shot was right down in the middle of the driveway, which I didn't even understand that. When I found out they hit that thing, I was okay with it because the pipe got to be cut and removed. Well, now I just put it on the other side of the driveway, but look what I just did. So I don't know the exact cost of that because it's not the completed well, but I can tell you it wasn't free, and I'll be paying for it. And I think a lot of times in our investment portfolios, we don't see the risk until after it has been experienced. And then you see it. But if you had the foresight, if you had just if somebody would just walked up to me and said, Brian, hey, what you ought to do is pay for a hydrologist or whatever those people are that come out here and figure out, a water witcher for all that matters, and go out there and have them point at a spot, and told me that it was going to be X percent of the whole cost or just wrapped into it, I would have done it, I think. But I needed somebody to kind of shake me and tell me to look. And right now, we're at that same spot. And I am really trying to encourage people to take notice to this, which is you've got a market at all-time highs. You've got a very volatile political scenario going on around the entire world, to include the United States. And it's a mess, right? But you're not asking questions right now. And I don't know why. And I'm asking that question, which is why? Do you have that much confidence in this direction? That you know it, that I went down 280 feet, which was at least 140 deeper than I would have ever told those guys to go. In fact, I was surprised when they called me and told me that they had gone down that far. I said, at what point should you guys have just said, forget it? You probably should be asking the questions. Take notice. That's it. And so I hope that those words will resonate with you. And whether your start is go to therealmoneypros.com. I'm not trying to preach to anybody. I'm not doing that. We're standing by to answer any question you've got when it comes to the world of finances. I would challenge any estate planning attorney on the air about some of their practices. We know what it feels like to actually go through the processes after the planning has been done. We know the practical steps. We understand taxes and estate planning and investing and planning, in health insurance, in coordinating, in trying to get your CPA, your tax person, to have a personality and pay attention to you. We understand what it takes to do that, but we also know how to moderate the behavior of a person that we might identify as being highly subject to extraneous forces moving their emotions around. We can give you steps to take to try to moderate those. That's my 25 years worth of experience right there.
No, it's like about, like you mentioned, having the steps and what that looks like. And like, if you're going to say, well, what does it actually do? Like, what comes out of like meeting with a financial advisor, right? And the young couple that I met with, they were focused on investments, and actually turns out that they were significantly underinsured on term insurance. 2 young kids, about $200,000 of life insurance through his company. Got to be fixed. No estate planning, no will or trust. Got to get this dialed in, meaning your focus could be on the wrong thing. Yes, it's about asking questions, but what questions are you not asking? This is all a part of what we cover here at The Real Money Pros. We got to take a break. Again, phone lines are open. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
And now, back to the Real Money Pros.
And welcome back. This is the Real Money Pros. Jeremiah Bates, Brian Wiley, fiduciary financial advisors here at your service. We are live, which means phone lines are open. Interact with us. You have questions, we have answers, and if we don't have the answer, we will find you one. 979-59-MONEY. That is 979-596-6639. Now, in the urgency of time, we're going to play a call, an interaction that we had with a caller. Had some great questions. Josh, go ahead and cue that up. Let's play it because there's some great info to come out of this.
My question is around health insurance. Recently separated from employment, had a great opportunity for 11 plus years, wanted to go out on my own, started an LLC. Currently drawing upon COBRA to cover health insurance for myself, my wife, and one dependent who lives at home. But recognizing that things may be changing, and we're now here at the end of October, or coming up on the end of October, November's coming, the year, first of the year's coming around. What should I be looking for as it relates to health insurance for my family? And then how do I attribute the expense? Do I do that inside an expense within the LLC, or do I put it on a Schedule A for a 1040 return? That's what I'm looking for some guidance on.
Great questions. I mean, that's one of the biggest, amongst all the other things, when you leave your previous employer and you go in the self-employed route, generally one of the biggest things that you got to look at is what were the benefits that were being offered by my employer. Health insurance, life insurance, maybe some short-term, long-term disability, those types of items. And obviously the one that's right in front of you is the health insurance. So now we're talking about comparing COBRA to what is available on the exchange. Think of the Affordable Care Act. So have you looked into any plans that are on the exchange and compared those to COBRA?
I did. I looked at our COBRA versus what the exchange would be, and the exchange was maybe $100 more or $100 less per month. But we have a son that has some medical items that have happened over this calendar year. He needs some additional items, and he had met all of his out-of-pocket expense, so everything was quote-unquote 100%. So we've continued that COBRA, and our thought is to continue that through the end of this year, but then look at next year and make that change. Is that a good strategy, or am I thinking of that correctly?
Yeah, it's hard to argue. I mean, because it really, when it comes, in my opinion, when you're comparing to continue COBRA coverage and then comparing it to the exchange, obviously making sure that obviously you're paying attention to what you've paid into it, meeting your deductibles, which is great. And obviously pivoting from that, you're starting on a new schedule. So now the fact that we are pretty dang close and in open enrollment going into 2026, what is the best option for you? And if you can, COBRA generally you can carry for 18 months. And then when that COBRA coverage hits that sunset, then you will qualify what's called a special enrollment period. So you're not beholden to the open enrollments that generally happen at the end of the year. So in theory, you could continue on that COBRA, but in my opinion, if it's going to end at that 18 months, maybe halfway through the year or the beginning of 2026, then you're kind of in the same, I don't want to call it a predicament, but you're in that same situation where maybe you've paid into the hitting your deductibles for that plan, and then you got to pivot, and then you got to start all over. So it might be worth considering getting on the exchange and looking into a new plan going into calendar year 2026. Now, when you're looking at the fact that you're self-employed and the tax benefits that come from that, there's certainly that is there for you when you are self-employed. Now, to get into the nuance of it, meaning actually how is this going to work logistically when you're filing your taxes, it actually doesn't hit the Schedule C, meaning it's not actually booked as a business expense, if you will, but you can claim the self-employed health insurance deduction, and that is it goes essentially on your 1040, your Schedule 1. So there is some there's going to be some net tax benefits to you to paying the full pop on those premiums. Now, here's a big unknown that we're running into right now is within the Affordable Care Act and the tax credits. Now, I would love to say that, hey, if we can find ways to lower your modified adjusted gross income, and generally when you're self-employed, there's a lot of different ways to do this. You can essentially and legally manipulate your income to maximize that subsidized healthcare plan, meaning you're getting a tax credit which would reduce your premiums. However, what we're running into right now, along with the government shutdown and some infighting, is because those enhanced tax credits that were put in place or extended in 2022, those are set to sunset at the end of 2025. So as for what we know right now, we're going to go back to retroactively to a cliff, meaning there's not a long kind of phase out of these tax credits. It is if you make $1 over over the threshold of income, you lose your tax credit completely. So take this with a grain of salt, but I would go into 2026, and this is going to be a surprise for a lot of people who are on the exchange who are getting a significant tax credit. There's a good chance that it's going to go away completely. So for you, I would plan for, what do you expect your taxable household income to be for 2026?
It'll be north of 150,000.
Yeah, so you're pretty much well phased out. What's the size of your household on your tax return? Married, filing jointly, and then do you have any dependents?
married, filed jointly, and you have one dependent that's still living at home.
Okay. Yeah. So even with the enhanced tax credits, likely that you would be getting a very small one, arguably negligible. So bottom line is, I would prepare to pay full pop for those health insurance premiums, which are expected to increase for 2026 when you look at these numbers of these carriers and how they're going to approach it. So just be prepared for that. However, the silver lining is the fact that you're self-employed, you do get that self-employment healthcare premium deduction, which will lower your taxable income for 2026. And then, are you currently on an HSA eligible plan, health savings account?
Yes, it's HSA available, and I have funds in that HSA.
Perfect. You can use those HSA funds to pay for your COBRA premiums if you feel the need to. If you need that, if you need that type of account to cover that cost, if maybe cash flow is a little tight. But if you're planning to get on another HSA eligible plan for 2026, obviously you get those pre-tax savings benefits. Where if you're over 55 in a household and there's more than one person that's covered, that's over $10,000 that you could put away pre-tax into that HSA. So again, there's going to be some net benefits to you. The fact that you're self-employed, yeah, it kind of stinks that the health insurance, it's expenses. It is expensive as it is, but it's something that's needed. So in your case, you're going to get those tax benefits moving forward for 2026, and if it'll continue on unless if you or your spouse are eligible for coverage through an employer plan, then that benefit goes away. But as it stands right now, you could take advantage of those tax benefits.
And those benefits, again, are on the individual tax return, not the business LLC return.
Correct.
Thank you. You guys are awesome. Been listening for a couple of months now and greatly appreciate your approach from a consultative standpoint and the knowledge that you have and just good answers that we can get out through your radio program. Greatly appreciate it.
Thank you. I appreciate that on our side for you.
Thank you.
I still have that same cold. At the same time, I have a little bit of a cold right now. Anyway, go ahead.
No, I mean
97959 money is the phone line.
Yeah, 979-59 money. That's 979-596-6639. It's a great question. This is something that we run into quite often, is when you have someone leaving the corporate workforce and they go into the self-employment route. How do you handle and navigate all the changes that are outside just the investments? That's what we're here for. Real Money Pros. We'll be right back.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then used tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite, because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples Associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and posters when you spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. This is the Real Money Pros, therealmoneypros.com. So I told you about the well that I had been digging, and I don't understand this, Jeremiah.
I don't either. It's like this whole concept. I mean, I thought especially with technology now, you think they'd be much more pinpointed. Meaning the odds of them getting into a dry spot seems very unlikely. I would think. I'm completely ignorant. I have no idea.
Somebody out there can tell me about this, please, because you'll understand drilling in the wells and all that stuff. So it's a piece of property basically on the side of a mountain with a bunch of other houses on the same street or road. And the well reports were 80 feet, 120, 100, 90, whatever. And they're getting anywhere from 10 to, let's say, 15 gallons a minute. Well, then they dig a hole in mine, which is surrounded by these other drill reports, surrounded by them. And it's in the same type of a sloping and everything, the whole bit, that I just visually, I have no clue what's going on down there. And they go down 40 feet and they make an artesian well that apparently is something you have to immediately cap. And they capped it. 25 feet away, they'd go down 280 feet. It's a dry well. How does this happen? Can somebody please explain it to me? Because it's an experiment that I can't afford. And I think a lot of times we're doing the same thing. It's an experiment we can't afford. I'm asking right now, even politically, what's going on. We're making experiments, and the question is can we afford them? And these experiments are, will the tariffs work? Or will these real abrupt trade negotiations work? But I can tell you that most people don't have the emotional tolerance to be able to handle this type of an approach if it's going to cause volatility to be even worse. So you see how I'm trying to really wrap all this stuff together today, Jeremiah, which is to understand there's a much bigger difference between your risk tolerance and what your investments are going to look like. But your risk tolerance should be more associated with your behavioral fortitude to say, how would you describe yourself? Can you ignore news? Well, right now, this news is gathering up so much people because now we're pulling emotional heartstrings in every aspect of it. It's like you went too far off of the liberal side, and then the conservative rebound effect. It's like using astringent eye drops too long. You get the rebound effect, or too much nasal spray, you get the rebound effect, and we're seeing the rebound effect. And I don't know that a lot of people have that emotional fortitude to just cruise through this and stay in the middle of the guardrails. Are you changing the way that you invest? How would you classify your risk tolerance? So you can go to therealmoneypros.com and tell us about it, or call us here on the program at 979-59-MONEY. It's 979-596-6639.
Well, I think when you're talking about that emotional fortitude, generally, if at least in my experience, when it comes to being so emotionally wrapped up and let emotions dictate your financial or investing strategy, that's generally due to some type of experience, and we can get into the whole psychology of this, of how were you brought up with money? What was your relationship with money? How did your parents handle money? Was that a point of contention in the household when you were younger? Like, there's a lot of things that feed into this, but again, that can be a dangerous approach, because meaning if you're letting that inertia or all those habits that have gotten you to this point where you're steadfast in saying, I am a conservative investor, it means you're just missing out on so many opportunities. It's like when I started training jiu-jitsu, I stunk. I was getting my butt beat all up and down the mats. And
we all loved it while you stunk. But go ahead.
Yeah. But I've been doing it for, I think I'm going on 3 years now. I got a belt promotion, and just earlier this week, the spouse of the owner of the gym, her name's Marie. She's great. And she's pretty good herself. I mean, she can kick some people's butts, but she was watching me train, going against these people that have been training for a little bit. And she's like, wow, your skills have gotten pretty good. I'm like, yeah, who would have thought, 3 years of doing this, that I'd finally get to a point where I have a long ways to go. And trust me, I still get my butt kicked. Let's put it that way. But you can see the progression of the skills. And it came down to education, learning. And if I just would have stayed stuck in the way when I initially did, like, no, I guess I just stink at jiu-jitsu, I'm never going to be good. It's like, well, then of course you're not going to get better, or you're just going to quit and not do it. So same thing when you talk about investors, it's one part of our industry. And obviously I'm painting with a broad brush here. When we talk about risk tolerances, I'm not a fan of it, because it's almost you're leaning on that designation of risk tolerance to then determine exactly how you invest and how you allocate, which a lot of times isn't the best thing to do.
But if you've got something I want, now I know that your risk tolerance, like where you rate yourself risk tolerance wise, it helps me explain how to go get it.
Yeah.
Because now I know that if you'd say, yeah, I'm a moderate or aggressive risk tolerance, you don't know. You're actually talking about your behavior. And that means I can probably rile you up, get you excited, and sell you something. Whether I'm going to sell you something on fear because the markets will crumble. Oh, my gosh, don't do that. So we're going to end up in an annuity. Or you're going to buy it on greed. And you're going to end up with some unknown cryptocurrency based on some story that nobody else is telling. And that's what we want to know. Like, I actually want to know it about you. Like, how would you rate yourself? Because then I could at least help provide the pathway to have the education to be able to manage that behavior. Because in politics right now, it's a win or lose game. And right now, people have taken sides. And I got to ask you, you can call the program and tell me, which side are you on? Are you on the liberal side, or are you on the conservative side? We had a client. He was retiring from Micron, and this is back when Micron was bouncing from 60 to 100, and this is long after it was stuck at $4 or $6, and he was hesitant to retire when it was at 80 or 70 because he thought it was going to go to 90 or 100 or something like that, and he drugged this out for years. Like, he drug it out for years, and he was constantly looking at the price of Micron. And finally, he settles on a price. And, of course, now it's gone up way past that. And I'm sure he wishes he would have hung up with it. But let's not forget that there was a problem. We're sitting there talking about Micron. Let's talk about the fact that you're 100% exposed to a company's stock. Let's forget about the fact of when to sell it. That's the dumb part. And the easiest part, we'll just be done with that. Let's talk about what got you in to be 100% invested in the same company you work for. And there's the problem, because you think, well, this is the best way, but do you even open your ears to listen to the other ways? And this is what I'm saying about society right now. What I've noticed is that when people have gone through college and such, they have not gone through enough critical thinking type of courses that helps moderate how you would approach something to make a decision, a judgment, or whatever it's going to be. The more we would have that in society, the better we would understand how to negotiate. And right now, I got to tell you, it doesn't matter what I think about our president, good or bad, but I think we could probably all agree that better communication would be a great thing. The opportunity is out there right now to unite the people. But right now, playing the people's emotions, polarity, if you're a part of it right now, then you're a part of the emotional game, and you need a better plan. You need a better plan to get you sucked away from the right or the left, whichever side you polarize yourself to, because you don't even know it. How do you explain to a crazy person that they're acting crazy? You don't know it, so you're so polarized. That's it. I'm this side, I'm that side, or whatever it is, that now you're starting to then trickle down to what you do in your life. It's going to be what you put in your body, but also how you invest your money. It's going to still follow those types of polarized beliefs, and you know it. It's not the best way. The best way is to put the guardrails up, understand both sides, and figure out the most efficient way to pass through something that is inevitable and out of your control. You're going to drive into the mountains. You know the roads are going to be curvy and they're going to go up and down. You can find the most efficient path to get through it safely. And you can do the same thing with this. My feel on this one is it's found in the better buckets that we've designed that you can go through on the Real Money Pros, and you can learn this and you can do it on your own. My question is who's going to counsel you to stay in it when you start to go back to your old ways? Because, Jeremiah, you're learning jujitsu to try to instill some sort of a strategy. Which, why do you even like that sport? By the way, you know how injured you can get.
Gosh. I haven't gotten injured. There's a difference between getting hurt and getting injured. I've gotten hurt a bunch. Plenty of boo-boos, as I like to call it. No, I haven't gotten significantly injured. Maybe once or twice, but maybe it took me about 2 weeks to recuperate. Honestly, the reason why I do is just it's the competition side of things. I think the older you grew up playing sports, there's that competition, and then you get in this season of life where you just weren't good enough to play, professionally. So that aspect of your life goes away completely. So it's good to have that competition consistently back in my life, mano y mano.
So what is, and I guess it's so vague, and we should have talked about this before I asked this question, but what's the most dangerous response in a threat situation? The most dangerous way to respond?
Oh, erratically. Like, it's just out of fear and emotion.
Herky, jerky, things like that. So, and what's the way to moderate? And what you're doing right now? It was the training. And I'm going to guess that right now you lose less in matches now that you have some strategy, because you know that you don't need to flinch yourself out of something that gets yourself into something worse.
Indeed.
So it's the education that is moderating you, but it's actually making you better to play the game in the first place. So how does it hurt? It doesn't. It's a Real Money Pros. Stay with us. Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Back to the Real Money Pros.
You can visit us online at therealmoneypros.com. Please do interact with us, join the newsletter, show the sponsors there's a reason for us to be broadcasting. We're giving you a good message on the weekends without a sales hook in it. Jeremiah and I are both fiduciary advisors. We're also both voters. We're both family men that love our families, and we also love our nation. And we believe that through education and working together, we can make people better investors. We truly believe it. We think we have a process, too. And you can find it at therealmoneypros.com. So please support our sponsors. They support us. They also support the message of the program. And so the message, in my opinion, if you can find something unhealthy about it, then let us know. If you got a question regarding anything financial, call the program. What I'm asking right now is how people are going to deal with the volatility, or are you polarized right now? Do you find yourself maybe not knowing, but you're running around wearing a jersey for the team? You've taken opinions. You don't really read the stories that might explain something that doesn't support your part of the story or your version of the story. And I'm talking about you on the left and on the right. What I'm learning is that the more strategy, the better. So, Jeremiah, I'm going to guess that when you started with jiu-jitsu, that there was some sort of a fear of fighting that had to be part of the decision for you to do it, meaning I don't like fighting. I'm afraid that I don't know what to do, so I would like to do something about it.
Yeah,
right?
Well, I think a lot of it is, too. I was the youngest of three boys growing up, and my brothers used to wail on me. So I think it was, like, always conditioned of, like, you're just going to get beat up. But that was certainly a part of the decision-making process of, being able to effectively handle a situation and de-escalate it because you have the proper training, that you don't have to act in an erratic or your response is just completely based out of fight or flight.
Exactly. So we talked about that in the last segment, which is the worst response in any sort of a situation like that is going to be an overreaction, or you could say even an underreaction. Let's imagine you had no reaction. You're just a mute. You know nothing had happened. Well, you could potentially take a pummeling, right? And so overreaction could get you into somebody else's move. But let me guess. So when you started doing the jiu-jitsu, you learned some moves, and you started to feel like, oh, well, I could actually put this to use if I ever needed to. Like maybe even 100%. a fantasy of if I could relive that fight when I was 9 years old with
100%. 100%.
Okay. So I'm painting the picture that seems to be true. Then, as you're learning, you get your first belt and you show back up, and you're noticing that the other guys that you're still training with, that you're starting to learn when they're going to move in some direction, and you're able to anticipate it and respond to it because you started to notice the repetition. And then I'm going to guess that now you're starting to get into a stage where you're saying, I enjoy the strategy of this thing more than you're not thinking about it as a fighting sport anymore.
Correct.
Are you?
No, not at all.
I got you nailed right now. That is a perfect example of how you could handle your investment life. You could be afraid of the fight. You don't get in it. You avoid it. Or you could be overreactive. I'm into crypto only. That's it. But once you get into it, if that's the way you got to start to get you interested, then fine. You're going to lose your money, and then you're going to finally call, or you're going to learn that there's some sort of strategy to it. Once you learn that there is a strategy inside the investment markets, you're going to find out something. that when I was explaining to you that you're probably sitting on a polarized side and you don't even realize it when you're in it because it's like a crazy person telling them that they're acting crazy and they don't really understand that because they're in the crazy mode. It's the same thing going on right now. So your fear of the investing markets, any of that stuff will translate and be moderated right back through the training to the point where your enjoyment of it would start to be that you're anticipating what's happening with the markets sooner than it occurs, and you're able to actually use it to your advantage. And then you've actually crossed the line that you never knew it existed. You've accused it. You've said that people control and manipulate the markets. No, people have been able to read your responses to certain events, predict them, and profit off of them. Which side of it do you want to be on? And so all the politicking that's going on right now, I can tell you that the message right now is unhealthy. I don't care which way you spin it, and it is unhealthy. This government shutdown is purely political, and we're on the extremes of it. And right now, you're being subjected to it. Your wallet has been drafted for a tariff war. That's all there is to it. And let's face it, if you're supporting it or if you're objecting to any of it, then you've fallen into the polarized part of it. And you might want to still go back to what was my plan? What were my personal interests? And what do I need to do? And get back into, start saying, what if your successes were you just were able to start predicting what was going to occur next? And those you count as your successes because those are easy to actually take advantage of. In the meantime, here's the way you start it. You got to start with some sort of a basic plan and a desire. Jeremiah walked into the Taekwondo jiu-jitsu, excuse me, totally different, right? Wait a second. Which one would win?
That's a tough one.
Taekwondo's got a lot of striking, right?
Well, yeah, you're talking about striking versus grappling, so starkly different.
Okay, I always vote for the wrestler. Always.
Yeah, I mean, everyone has a punching chance. Everybody does, but assuming that punch does not hit the proper button, I think a good grappler would win against a good Taekwondo artist. Just
I met Daryl Flores today. He's a UFC fighter, and I met him today. So.
Wow, cool.
I think he's jiu-jitsu. I'll actually have to ask him here when we're done with the program because he's running around here right now.
Too cool.
Yeah. Phone lines are open, 979-59-MONEY. That's 979-596-6639. Only a few minutes left. I do want your messages over the week, so go to therealmoneypros.com and respond back to, this is the direction I think things are headed. Optimism or fear, you can tell it to us and tell us what your plan is. Or if you don't know the plan and you say, this is where I think things are going, and you don't know what to do, then send that as well because maybe we can provide some sort of education to help moderate you in your responses. Yeah. So behavioral investing, it's really what I'm hanging my hat on here. I after 25 years, it took me a long time to figure it out that it was my behavior, not realizing that it was a behavior that I needed to watch more with people. And the better financial advisor I became was when I really started to understand the weaknesses and the strengths of my clients. And that was understanding their behavioral fortitude for things.
Yeah, it's a part that I've really started to, well, not starting, but has been pushed more to the forefront as I continue my career. Because when you first start, you're just so focused on the numbers, the technical side, all of that. And then you quickly realize, like, not saying that stuff is not important. It is. But at some point, forecasting and technical now, I mean, it's going to reach this point to where, okay, let's get into the things that move the needle the most. And you're right, it's people's behaviors. Because listen, no one cares about your money more than you do. And we're not robots. We don't look at our dollars as just ones and zeros and equations and compounding interest. Your dollars represent something. Like, it's going to represent a dream. It's going to represent a goal. It's going to represent security. It's going to represent safety. It's going to represent future comfort for your kids and their education and an investment in human capital. You name it, that's what it represents. So again, when we talk about these emotional components that are tied to this, how do you get them to serve in favor of those outcomes and those goals versus working against you? And then, again, have you even defined those yet? Because it's when you are investing for a purpose, then you can logic yourself into a strategy. You can follow the strategy. And, of course, you can make tweaks to the strategy along the way. But generally, that is what works out for successful investors, for people who accumulate wealth and attain wealth. Brian, I'm sure you'll agree with this statement, working with thousands of households over the decades that you've been in this career. And I've certainly seen it. Where people run into issues, in my opinion, is where there's no definition. It's just they're kind of haphazardly putting money into investments and not really knowing why the money's in there, what the purpose of it is. And then you're kind of stuck in no person's land of, well, I just don't know what to do. That's where having that education, that coaching, that training can help take you to that next level of sophistication.
This is one of those things where I'm going to suggest, just like I should have before a 280-foot dry well got dug, wouldn't just spend a little bit of money to see if the plan was good. So for those of you that actually feel too smart for us, like you guys are just talking about basic. No, we're not. We're talking about the behavior of the wealthiest people I've ever met that have 10 times more money than I'll ever dream of having. And they're still subject to these exact same things. So my question is, why wouldn't you pay to go make sure that you're on the right path? That feeling of confirmation you need for it. Why wouldn't you do that? Now, we're offering it, and we know advisors with the Apollon Wealth Management Network that offer it for free. Contact us.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates.